So good afternoon, Singapore, and good morning, Paris. Welcome to our virtual event, Moving to a Cashless Society, from our French pavilion, Choose France, La French Tech, at Singapore FinTech Festival, organized by the French Chamber of Commerce in Singapore. My name is Lydia Fluton. I'm in charge of the Member Services and Communication. And this is my great pleasure to welcome here Meg Chaperon, Senior Product Marketing at Descartes Underwriting, Christopher Muffa, Founder and CEO at Datena, Glenn Wu, Managing Director, Head of APAC at Ledger, Loic Enoch, Head of Operation at Incomeland, and Siti Siri Manotam, Partner at Orexia. Before we start, I'm now honored to welcome Her Excellency Marc Abensour, Ambassador of France to Singapore, for some opening remarks. Her Excellency, please, the virtual floor is yours.
Bonjour, good morning, good afternoon, everyone. Can you hear me? Yeah? Okay, good. Thank you. I'm delighted, to participate to this session on a cashless society. As you know, last year, France was very present at the Switch FinTech Festival. There were over 50 French startups and companies participating to last year edition, and it was an excellent opportunity, to engage in collaboration with the local and I would say even regional ecosystem. And it was a collective endeavor with many stakeholders of the French tech and innovation ecosystem based in Singapore. So this year it was, of course, maybe more challenging, but I think it bodes very well about the dynamism of the French ecosystem in Singapore. We were among the first countries actually to have embarked in the preparation of the 2020 Switch FinTech Festival, and which has now a hybrid format. We are very glad, to have this French pavilion, and which is part of the Switch FinTech platform, and it's the opportunity also for the French Tech Singapore to contribute through many kinds of intervention. I know that you will discuss all kinds of issues, just to name a few. AI in banking, fintech, and how to have the top-notch fintech based in Southeast Asia to contribute, to this discussion. As I said, France was the partner country of this year edition of the Switch FinTech Festival from the very beginning, and you may have followed yesterday our participation through a physical organization of an event based in Paris at Palais Brongniart, the former stock exchange in France, and which was the opportunity also to highlight the synergies between our two tech ecosystem, Singapore and Paris, with this idea, that both can be the gateway. For Singapore, the gateway to Southeast Asia and beyond, and for Paris, the gateway to Europe, and I would say even beyond Europe, it could also cover, Northeast Africa as well. And during this session yesterday, we were very pleased, to have a high-level participation of Minister Cédric O, our Minister for Digital Transition, also the Governor of Banque de France, François Villeroy de Gallo, and as you may know, Banque de France has just opened a regional office here in Singapore a few months ago. So it's the second international office of Banque de France. The first one is in New York and was opened 10 years ago. And I think it tells us, also the importance of Singapore in our approach to that part, to that region in the world. And we had also, some high representatives of other institutions such as Paris Europlace, but also BPI, so the French Public Bank for Investment, and of course the French tech. And I think they contributed, I mean, to convey a message of dynamism and the fact that the French tech ecosystem in France is really booming, even during these very challenging times. We were very pleased also to have in this panel yesterday members of what we call now the Next 40 startup, which is a group of the most promising startup, which can become the unicorns of tomorrow. And among them, there was one, Ledger, which will participate, I mean, to our discussion today, and which was represented by its general manager for Asia Pacific, Glenn Wu. So I think overall, if we look back over the last 2-3 years, we have made a very significant progress to build these synergies between the Singapore and France tech and innovation ecosystem. There is a French tech community here in Singapore, which is extremely dynamic and which is very well inserted, I mean, within the local ecosystem. And so let me just mention, I mean, a few significant developments over the last month, I would say, despite even the COVID crisis, which does reflect, I mean, the dynamism I was referring to. In the last 2 weeks, we had a video conference between Minister Iswaran, Minister for Communications and Information, and Cédric O, our Minister for Digital Transition. And during their video conference, they adopted a roadmap, a shared roadmap on artificial intelligence. And clearly, this is one of the top priority of our collaboration. And what is quite, I think, interesting is that actually in AI we cover the whole spectrum. So from R&D, and we will engage in a program to develop the new tools of AI, but also a part where we try to develop, in connection with the private sector, applications in specific segments of AI, and also a third pillar covering governance to promote together inclusive and responsible AI. And as you may have followed over the last few days, Singapore is now a co-founder of what we call Global Partnership for AI. There was the first meeting yesterday, and we are clearly, I mean, moving in the same direction to promote a similar approach on AI. So this is a very promising area of collaboration between our two countries. Another initiative that I wanted to mention also, it's the implementation of the acceleration program in France called Hello Tomorrow Innovation Alliance, which is designed to support access to the European market for Singaporean technology startups and SMEs, and clearly with a strong focus on deep tech, and which can also build on the R&D collaboration between our two countries. Let me also mention another program which is developing very well, which is the partnership between BPI, the French Public Investment Bank, and Enterprise Singapore for co-funding solutions for a partnership on technological solutions applied to, again, some specific sectors. It's a program that we launched 2 years ago now. There was a first call for project, which proved successful. We launched a second call for project, which again was quite successful. And so now we decided, to keep this program open all the time and to match, startup SMEs from both countries with this co-funding support. And we are also engaged in some discussion to see how we could set up a cross-border fund for startups, for supporting startups from France and Singapore and ASEAN. It's clearly, additional building brick that we would like, to develop in the coming month. So this, what I've just recalled, it's very much in line with today's session on cashless society. Clearly, we are all witnessing the fact that in a COVID world, I would say, we will rely even more than before on cashless devices and solutions. There is from the consumers, side, this demand, to have something which is completely secure and so not using cash. And on the technological side, we see, myriads of solutions, which rely on demonetization, and that with many implications in terms of identity, mobile device, payments, and so on, which will have, some radical consequences on commerce and financial services. So I'm very eager, to follow your discussion, which will cover, the role of AI, the personal data protection, the regulatory framework, which can accompany, solution promoting a cashless society. It's clearly, one of the issues that we are following very closely, both, in France and in Singapore. And again, because we share the same approach on tech, on AI, which is to promote an approach based on responsibility, inclusiveness at the same time. So without further ado, I wish you a very fruitful exchange, and I'm again, very grateful, for all the different participants to this session. Thank you very much.
Thank you very much. Great, Meg, sorry, if you want to start.
Sure, thank you, Ambassador Evansor. My name is Meg Chaperon. I lead up product marketing at Descartes Underwriting. We are an insurtech headquartered in Paris, and similar to Banque de France, we have offices opening in New York and Singapore early next year. So I wanted to talk a little bit about what Ambassador Evansor was mentioning, about how artificial intelligence and cashless applications, such as automatic payments, can make businesses more resilient to emerging risks. Cash requires physical transactions. It takes times to be accounted for, and it's neither quick nor remote compatible, a critical element as we've been experiencing during and post COVID-19. The same challenge applies to corporate insurance. Utilizing data and AI allows us to annihilate the time it takes to normally reach a transaction following a loss event. Empowering insurers and clients to be remote ready at all times, whether there's a global pandemic, whether there's a typhoon that has unfortunately wiped out infrastructure. So at Descartes Underwriting, we utilize AI in the form of machine learning, advanced statistics, and climate modeling to build parametric insurance solutions that are customized to corporate clients' needs and governments' risk exposure. We specialize particularly in natural catastrophe and climate-related risks. So think flooding, typhoon, extreme wind, earthquake, etc. All of which can interrupt business operations and damage assets and property. In parametrics, policies are straightforward and streamlined to trigger automatic payouts on predefined parameters. For example, a parametric policy for an automotive factory against typhoon may be set up so that if the maximum sustained wind speed is a category 4, and the typhoon storm path falls within X kilometers of the automotive factory location, during the policy period Y, the company would automatically be paid out Z within a matter of hours or days. This again is where AI and new data sources are exponentially increasing business resilience. The real-time monitoring from AIT data sources, such as satellite imagery, and the rapid assessment of the parametric trigger cuts out the normal time of claims assessment and loss and damage recording and legal negotiations that follows traditional insurance. This can often take months, if not years, for a transaction and liquidity event to occur. The inherent cashless payment of parametric insurance policies really is helping corporations and governments bounce back faster, making them more resilient in the face of a changing climate and emerging risks as we've experienced this past year. I'm curious, Loic, how you see cashless payments and AI making companies more resilient at income land.
Thank you. So indeed, in income land we are doing trade finance, cross-border trade finance. So it means we are basically financing invoice for supplier in Asia, and we receive payment from buyer in Europe. So that's a lot of cashless and regulation, but I think that could be another topic. I wanted to share with you to focus a little bit about cashless society. Before going to income land in Singapore, I was living in China since 2006, and in China at this moment when I arrived, cash was king in China. Everything is based on cash, physical cash. When you give some what they call hongbao, red envelope for Chinese New Year's, everything is completely based on cash. They give new bills, creating new bills, and that's very, very important for the societies. Then it was the cashless society. We can buy something online, but it was not very advanced. No one was using international credit card. It was very, very somehow cash or bank transfer. Then something happened in 2012. Tencent was developing a new application named WeChat. Basically, at the beginning, it was just a messaging application, a little bit like we have now in WhatsApp or Messenger or something like this. So quickly, people started to use it because it was very convenient, and they was using messaging application quite a lot via QQ messaging. So there was kind of evolutions. The trick happened when Tencent on WeChat asked people to connect the bank account to WeChat onto some virtual e-wallet. It was very, very new, so people was a little bit cautious about it, including myself. Then they did something at this in 2000, I think it was 2014, and in 2013, sorry, for the Chinese New Year, they decided to organize a game around the red envelopes. So they say with WeChat, you can send for Chinese New Year to all your family, employee, and everyone, a red envelope on an amount of money via WeChat. That was the very revolutions. And there was at this moment about 250 million users of WeChat, and in only 1 month or 2 months, 150 million people just connected their bank account to WeChat, including me. And that's what the beginning of the cashless society. So people realized they can send money to other people, to their friends, to the family via hongbao or via red envelope, only via WeChat. That was really the beginning. And then the number of users of WeChat increased. The numbers of bank account connected to WeChat increased as well. So we start to have the abilities to do more than that, than to send money. In 2015, I was able to pay my rent, to pay my bills, to order almost everything just via WeChat. Actually, I started to not use my bank account, and I could receive my salary as well on WeChat. And the first reflex is, okay, you can transfer from your e-wallet WeChat the money to your bank, but what for? Because you don't use the bank anymore. You use just your WeChat, your WeChat e-wallet. So the society moved completely for a very cash-based societies to a very cashless societies when you can do everything via one applications. And when I was living there, I was managing a company. I was sending some salaries via WeChat. I was discussing and receiving some payment from my customers via WeChat. Everything was done in WeChat. To give you an idea on the scales of that, after 2017, and that's still the case now, you do everything with WeChat. You pay your taxi, you buy your cigarette, you go to the small shop, even the street shop in the street will not accept any cash. They will take the WeChat payment. I even saw some homeless people, rather than to collect money. There was homeless people, so that in the street, they have a small smartphone, and you can give them money via WeChat. So in a space of 6-7 years, that's an example of our company, a society very based on cash is king, moving completely to the cashless society in a daily life as an individual, and as well in a professional way. It means that when I left China in 2018, everything was done on WeChat, on the company side, on individual side. So I was just wanted to share you this, because when I arrived in Singapore, I say, wow, that's well organized. That's great. But when I start to use Pavilion online, I had the feeling to be back in 2012 a little bit, because there is two different systems. There is two different systems on two different applications, where in China you can do everything with one application. So artificial intelligence, in that, of course, they have done some terms of data. So they can track every expenses, every data on your e-wallet. First for controlling, you are in China, but as well to use that as a marketing tool. So that's the experience I got on this part.
Well, thanks a lot, Loic. So I'm Chris. I'm the CEO and founder of Datina. So we are a company that scan information to identify sensitive and personal information in order to better protect them. And I think it's very interesting that you mentioned WeChat. We've seen like a rapid adoption, in China indeed, but we are seeing this in the region as well. In Asia, there's not only like the mobile apps as a mobile payment or cashless. You can think about online banking and banking cards. Think about the QR code as well. I personally use QR code and pay now in Singapore. I find it quite convenient. And also, of course, you have the cryptocurrency. In this world, you have a lot of online fraud growing. A fun fact: in 2009, we had 7 billion loss in the banking and payment industry. In the COVID world, where everyone is being challenged to do it in person, we have seen that loss increase already by 24%. So it's a massive increase of fraud as of today. So that the question is like how we can use AI to make cashless transaction safer and secured. I think there's like different type of risk. Number one, the risk is on availability and resiliency of the system. People use technology and complex system to make payments. So any glitch or mistake would leave the customer without the ability to make transaction and sometime at critical time. So AI can prevent to make the system more resilient. You have systems now that are proactive warning system to avoid payment service disruption and outage. And interestingly, you also have a lot of AI chatbots that support the customer for real-time resolution. If you have a problem with your banking system or payment system, you can reach the customer service 24/7. And the problem could be resolved in real time. So I think this is quite amazing. But if I take the biggest risk, what I see right now is really about fraud and crime. Think about identity theft and account takeover. Think about fraudulent transaction and money laundering. So AI here is the key to identify, the legitimate users. Think about Apple Pay. I think it's quite amazing. You have facial recognition, for your payment system. You also have the fingerprint, and now you have, customer behavior analytics. So the way you behave is telling you who's behind, which is, the speed of the move of your thumb on your smartphone. The way you move your smartphone tells who's really behind the smartphone. And I think this is a critical piece of security to ensure that we have safe cashless system. If you take like internal fraud for those who have employees, for the large organization that have employees that handle transaction, you can also use pattern recognition to identify the users and the people that operate on the system, and any suspicious activities can be flagged. Actually, have built a lot of system like that for HSBC and Barclays. You can think about login to the banking system in outside of office hours. You can think about like connecting in a weird or remote location, and these can be flagged, and then you can block the transaction or block the activities. From an external perspective, you also have AI that's used to monitor every single transaction that you make. So funny enough, everyone has a pattern in the way you consume and create. We can consume and buy things. So we know what you buy, where, and when. And regardless of the size of the transaction, we are able to predict whether or not the transaction is potentially suspicious, and therefore you can block the transaction or call the customer to validate the transaction. So these different techniques overall prevent fraud and also money laundering methods, which is great. So cashless payment together with AI sort of become the catalyst to reduce and minimize crime and money laundering. In a cashless culture, people are connected by end-to-end payment infrastructure that provide complete transparency in the cash flow. The downside of this is the digital transaction that can bring some concern from a privacy perspective, because the question is like, who have access to these personal and payment data that can be easily tracked and recorded? And that leads to the next question, which is how to ensure data security and privacy in a cashless society. So I think, Glenn, you want to tell us a word on this.
Sure. Thanks for that, Chris. Since you've laid out a very strong ground on the AI side, I guess it's time to talk about blockchain a little bit. And this may not really answer the question of privacy directly, but maybe I can add a little bit because I come from a blockchain security background, and that's what we do at Ledger. So, I mean, in terms of the debate, whether blockchain is going to be truly disruptive to cashless society, I don't think there's a question about it anymore. And blockchain will definitely excel the digitization of many type of currencies. There is still debates about whether cryptocurrencies like Bitcoin will disrupt government-issued currencies. But there's also other things like non-government issued stable coins or public or semi-public network such as Tether or Facebook's Libra. Now it's called Diem, and they will clearly disrupt the market, and they are right now also. And also, it's the government-issued central bank digital currencies, also known as CBDCs. It's a big topic, and it will use blockchain to make improvements and reduce frictions in the way that they issue and to monitor their monetary policies. And I think all of these that I mentioned will coexist and to serve their own purposes for a while. While I think also Bitcoin will and is serving its new digital asset class, where it's not really cashless because from birth it never had any kind of form of a paper type format. So Bitcoin is like another new whole type of asset class. And the other crypto assets on public blockchain could accelerate the digitization of all type of money. And they are serving their purposes and the ecosystem, whether they're big or small, that they've built. Maybe I think the closest to our heart when it comes to this topic would be, government-issued currencies, the CBDCs, and more than 70% of the world's central banks are currently, working on it. They've implemented some strategies around it. And of course, these CBDCs can immediately take the advantage of the benefits of blockchain. So, it's a lower cost of cash management. It allows for bigger financial inclusion. So, if, for example, if a government wants to, send cash or to in-cash people, then they can obviously go through banks, but they don't have to. So it could be just an app, and then the money could be there. So those people that don't have bank account could be included in the financial system, as well as it could provide bigger roles to fintech companies, and maybe a little lesser roles for banks. And it's a lower cost of transactions for sure for the end users, and it allows for full traceability. Could be good and bad, but most of all, it's easier, and it's a lot more efficient, and government can also exercise a precise deployment of monetary policies. That would be a huge benefit. Also, government can now, save a lot of costs for tax collections, and if they want to automatically give, COVID relief packages of like $1,000 per citizens, they can do that just like that, because on blockchain, money could be programmable in such a way. And also, government will be accumulating a huge database on people and their spending behaviors, and it will give them a lot of power to better establish plans for next year, for example. And they will have the ability to sanction a criminal's spending ability by immediately just locking their wallets and freezing them. Do we really want all this? There is a big risk and big question mark of a person's financial sovereignty and liberty, and it could be stripped away. It's more of a philosophical question, and the more data that they accumulate from our behaviors would make the government more powerful every day. But as a matter of fact, even not using CBDCs on blockchain, the government can achieve what they're trying to achieve. And to a certain extent, using e-wallet apps and credit cards can also achieve similar results. But CBDCs would definitely reduce a lot of friction because they can go direct and much fuller control. Now, what about a non-government issued tokens like Facebook's Libra? And we all know that Libra Council's stablecoin, the Libra Council members are some of the most powerful companies globally. So do we feel more comfortable, giving away that to corporates, private corporates? I don't know. Like it's a philosophical debate. But from a technical perspective, all these concepts are achievable already. But these philosophical debate would have to be ironed out. But if you're to do something like this, we could definitely use blockchain, which is more resistant to a doomsday scenario, such as hackers stealing or manipulating critical information from a single database managed by a company or by a bank or a government or so on and so forth. With this debate rises the opportunity of cryptocurrencies such as Bitcoin or Ethereum on decentralized network. They natively, of course, have the benefits of blockchain as they're blockchain 1.0. And they can be programmed to do many different things, such as swaps, which could be an FX transaction in the traditional market, issuance of tokens, sending and receive, and so on and so forth. And there's no single entity that can actually manipulate how the money works. and other than just the supply and demand. So from this philosophy, the owner of the asset become their own bank, and they can protect their own financial sovereignty. But with all great powers comes great responsibility as well. So you have to protect your key, which is the proof of your ownership, or you have to find the right third party who you can trust. So going back to the original question, privacy topic is an ongoing debate, which I tend not to take a side on. But data security and protection is what blockchain does very well. And my company, Ledger, specializes in the protection of the keys on blockchain. And from that perspective, the industry already is presenting a strong solutions around that. So yeah, so that's my opinion on this. Thank you.
Thank you very much, Glenn. Maybe City, you want to tell us a little bit more about regulation and policy?
Yes, no, it's data privacy, right? I want to say a word about data privacy and moving to cashless society. I would say, yeah, we discussed about a lot of technology, of means, of different ways to moving into a cashless society. Definitely, with my colleagues here, social network is taking a big and huge part of it. Technology, such as QR codes or payment device, as mentioned, Christopher, on this is totally right, and we can see it every day in our day-to-day life in Singapore. But one of the questions here is, okay, to ensure data and privacy security, there is a rise on the regulations, I would say, as we are moving into this technological world. Governments and regulators are really taking care of this. And that's why all of this started, for example, in Europe with GDPR, the General Data Protection Regulations, aiming at securing, ensuring any data breach for the clients, to deal with security issues around data storage limitations, minimization of usage. They deal with transparency on the usage of data and confidentiality, I would say, accuracy and purpose limitations, and so on. I won't go in detail on the GDPR, but all of this starting in Europe, but is as well very huge in Asia. We got PDPA, for example, in Singapore, or we got PDPA in Hong Kong. But all of the frameworks regulations is to protect the clients. The client is in the middle of everything, and specifically the data of the clients. So third parties, bankers, or any companies involved in the moving into a cashless society will need first to understand and to consider all these local and global regulations. We cannot do anything we want with the clients. All the clients' data are protected. So first, I would say, to answer to the questions, in any organizations, you will have to have the infrastructure, the information system able to manage your data, from the data collections to the data management, data archive, and data communication and reports. So they will have to be aware about this to have a full system. And I would recommend as well to use innovations. Christopher has a great company. Datena is one of the examples of this company. They aim at work on data classification, data categorizations. They aim at working on the tagging and access right to users of the data. This is an example how to answer to these questions. Companies will have to have performance system, performance innovative solutions to deal with data privacy and data protections for the clients. And I would say information system is not the only way to do it. We need to lead change as well on the process and procedures, because it's good to have good systems, good infrastructures, but we have to have guidelines internally in all the companies with data governance, data policies. Everything needs to be written to make everyone aware about what needs to be done within the company. So this is procedures, process, governance. And after that, definitely you need to work with your team. You cannot go until only system and only procedures. You need to train your people. You need to make aware your people about all these issues on data privacy, all the regulations, all the requirements, all the constraints, So you will have to train them, you will have to communicate internally, but not only internally, I would say, you will need to communicate with your third parties, with your partners, to, I would say, all be compliant with all your data initiatives regarding the regulations. So yes, to answer to the questions, how to protect data for the clients is to be aware, the key fact would be aware of the local regulations, the global regulations, and to act carefully to avoid any risk of fine or sanctions. For example, they can be very heavy, but not only sanctions, clients' incidents is as well to be considered. So yes, this is my answer to the questions. And I will ask the last questions to Loic. So I talk about regulations. So I talk about local and global regulations. But Loic, what would be your point of view? How to comply with law and regulatory changes in different countries? You mentioned China, but maybe there is other countries.
Yes, it's true. Thank you, City. Indeed, that's a global challenge. We are doing invoice financing. So basically, we finance invoices from supplier around Asia. The buyer are based in Europe. When we finance invoices, it's external funders, and the funders are based in another countries. So indeed, regulation is something very, very important. When we make cash, we make cross-border transfer of cash like that. There is two parts. The first part is a kind of KYC or due diligence. You need to be sure when you send money to a supplier, whatever in China, whatever in Vietnam, or even in Singapore, you need to be sure you know exactly your customers. If you don't know correctly, the MIS can come back to you and say, hey, you sent some money from this guy, is it money laundering? So there is a very big, very critical aspect on that. And of course, to do that, you need to have different information from your customers, from the supplier, from the buyer. And the difficulty is in each countries, the documentation is a little bit different. The process are different. You don't have the same documentation. You cannot exactly fit to that. So that's where somehow an automatic analysis of document, having some information in India, for instance, a lot of information are available online on India, but a lot of data. Using artificial intelligence to get the data and to have a kind of risk matrix on a supplier is very, very critical. So the first part is okay, I want to send some money to the supplier, and the buyer is based in Europe, I want to receive some money. How do I know this is not money laundering? So that's all those KYC and risk analysis part, which is very critical on using more and more automation on artificial intelligence based on data for that. But that's still a lot of work to do. Not all countries are equal. Singapore, you can have all information. In Indonesia, that's pretty more difficult to have it. The second part of that is, once you succeed to do that, even if you send the money from the supplier, the finance invoice, you send some money from the supplier, depending on the country, you need that as well to take care of the regulation of the bank itself in the countries. I will take the example of China. You cannot send some money to China, to companies in China like this. I was in a situation when I was managing a company in China. I wanted to have some cash from France for a cash flow. It was a nightmare. On our situation is the same. We have a lot of supply in China. It doesn't mean we have the finance for the invoice. It doesn't mean the money will reach the bank account in China. Or in the same, or some country like Vietnam or Bangladesh, for instance. So there is really two parts in our conception of that, of cross-border transfer. It's very the KYC, the due diligence, to be sure we are, as City mentioned, to be sure we respect regulation. Otherwise, we will have an issue with the Singapore government. On the second part, to be sure the flow of money is smooth and will be accepted by the bank at the end. So everything is based on data, artificial intelligence, logic, on knowledge, and somehow having more and more online databases depending on the country to get the information online and to be able to make automatic analysis on them. I will take just one simple example. If you want to evaluate a risk between a supplier and a buyer in India, for instance, for us, we need to be sure when you finance an invoice, we get prepaid at the end. In India, you can have all the data, all the past trade transactions registered by the tax office. So you have access to those data and you make an automatic analysis on the data to say, okay, this trade is safe. We are able to send the money to the supplier once we finance the invoice. So that's fast because I know we don't have a lot of time, but I think that's the main issue as incumbent we're facing on the cashless society. Is not only in Singapore, it should be cashless society across over the world, and I think that's a difficult challenge to address.
Thank you very much, Loic. This is a perfect timing, and we are reaching to the end of this session. Thank you very much all. Thank you, Your Excellency. Thank you, Glenn. Thank you, Meg, Loic, Siti, and Christopher for your insightful inputs and for sharing your innovative solution, sorry. Thank you to all our participants, and we invite you to visit us on our virtual platform and virtual stand booth, called Choose France La French Tech. We would be very happy to meet you there. Thank you and have a good day. Bye.
Thank you. Bye.
Bye-bye.
Bye.